You know, everyone always talks about what you should be doing to become a profitable trader, but hardly anyone mentions what you should avoid. I'm a huge fan of cutting out the nonsense, the bad habits, traits, and actions that hold you back. Think about it. When you eliminate the bad stuff, you start improving almost immediately. For example, if you're constantly chasing losses or trading without a plan, those are habits you need to drop right now. In this video, I want to dive into the things you should stop doing today if you want to become a profitable trader. Let's cut out the bad habits together and start seeing some real progress. All right, let's start with a crucial tip. Stop calculating what you might gain before you even enter a trade. How many times have you found yourself staring at a potential trade and, before it even moves, you're already thinking, if this goes up, I'll make $10,000, or I could pocket $5,000 from this. You pull out your calculator and start daydreaming about all that money. This habit is really bad. When you focus on the potential gains, you're setting yourself up for bias. You begin seeing only the positives and completely overlook the negatives. Here's why this is dangerous. Once you're fixated on the profits, you start ignoring the risks. You might skip setting a stop loss or downplay the possibility of losing money. I've been there. In my early trading days, I'd look at a trade and think, this is going to net me $5,000, and I'd ignore my risk management strategy. I'd just jump in, hoping it would keep going up, and that mentality would wreck my entire trading plan. When you let potential gains cloud your judgment, you end up making irrational decisions. It's essential to keep a balanced view and not let the lure of profits blind you to the risks. So, ditch that calculator and focus on making well-rounded decisions. Your trading game will thank you for it. And next common mistake, strategy hopping. I see so many traders find a strategy that works for a week or two, but as soon as it stops delivering, they immediately start searching for the next big thing. Now, I agree, having multiple strategies for different market conditions is essential, but when a strategy stops working, your first move should be to figure out why. Are you making mistakes? Has the market changed direction? Or is the market just not suited to that strategy right now? Most traders skip this step. They think, well, I'm not making money with this, so I need something new. They start hunting for new indicators, new structures, anything to make a quick profit. What happens? They hop from strategy A to B to C to D and never give themselves the chance to really master one. I've seen it so many times. Traders abandon a strategy at the first sign of trouble instead of diagnosing the issue. Maybe they were using it wrong, or maybe the market conditions changed. But instead of understanding this, they just move on to the next shiny thing. In the end, they never develop the edge they need to truly succeed as a trader. Next mistake is about trying to catch tops and bottoms in trading. I see so many traders getting burned because they're fixated on nailing the exact bottom or top of a trade. I always tell traders that our job is to take as much as we can from a move. We don't need to capture the whole move, just a piece of it, and keep improving to secure bigger pieces with calculated risks and a solid edge. There have been plenty of times when I've walked away from a trade with $10,000, maybe even $20,000. Sure, if I had held on for another 30 or 40 minutes, I could have doubled or tripled that profit. It's frustrating to look back and see what could have been, but I have to remind myself that sticking to my game plan is crucial. That extra profit wasn't part of my strategy. It wasn't something I had planned for or had any edge on. I didn't see it coming, and that's okay. I executed the move I prepared for and made my profit. That's what matters. So, next time you're in a trade, don't beat yourself up thinking, I wish I got in earlier, or I wish I held longer. Our goal is to capitalize on a move, take a piece of it, and be able to do that consistently over time. Focus on what you planned and executed, and move on. That's how you build long-term success in trading. Moving on, I want to mention those big home run trades or YOLO trades. How many of you have tried to hit it big with a single trade? I get it. Our job as traders is to make money, but it's not about taking reckless trades with extreme risks. The moment we go for home run trades, we're stepping into dangerous territory by taking on more risk. For instance, if you want to make $10,000, you can't risk just a dollar, $10, or even $100. Sure, it might happen in rare cases, but realistically, you'd need to put on significant size. If you aim to make $20,000, you'll need to increase your position size even more. But if you're not ready to handle that level of risk, you're setting yourself up for failure. I've seen so many traders get caught up in this mindset. They think, I'll go in with 1,000 shares or contracts, or instead of risking $200, I'll risk $2,000 because I'm confident this trade will go higher. We do this because we assume we'll be right, and the trade will only move in our favor. But once we start focusing on potential profits, everything else, our risk management, our edge, our game plan, goes out the window. It's a recipe for disaster. If you want to make more, you have to accept more downside, which isn't the smartest move. Keep your risk in check, stick to your plan, and don't let the allure of big profits lead you astray. The next one, profit goals. Every trader sets them, and I used to do it all the time in my early days. I'd say, this year I need to make $100,000, or this month I need to make $200,000, or this quarter I need to hit a certain amount. Now, having profit goals is fine in most areas, but in trading it's a bit tricky. Let me explain why. In trading, having profit goals is difficult because the market doesn't always give you consistent opportunities. Some days or weeks the market is full of chances, and other times it's flat and dead. Imagine you set a goal to make $10,000 this month, but the market just isn't moving. You end up feeling pressured to put on trades and size up just to hit that goal. This can lead to bad trades, overtrading, and taking on too much risk, which puts you at a big disadvantage. So, what's the alternative? Don't set profit goals. Instead, focus on goals that improve your trading skills. Aim to refine your edge, get better at entries and exits, gradually increase your size, or add another strategy to your playbook. These should be your goals, not money-related ones. When you focus on improving your skills and strategies, the profits will follow naturally. And lastly, here's something that might seem counterintuitive, but it's important to understand. Following alerts in Discords, Telegrams, and similar platforms. Now, I don't have a problem with alert services per se. They can be fine. But the issue arises when new traders jump in, see someone saying, I'm buying this, or I'm selling that, and just copy it without understanding the move or the risks involved. Here's the thing. Most of the time, this approach doesn't work. Very few alert services are actually good. For most, it's not. And even if you do find a good alert service, you won't truly benefit unless you understand why that person is making those trades. You need to ask yourself, why did they buy here? How can I replicate this? So if you're using any alert services, that's fine. But make sure you're learning from them. Understand the process behind the trades, how they're being executed, and the thought process involved. Don't just copy the trades and hope to make money. That's not how it works, and I'm sorry to tell you, but you'll end up disappointed. Focus on learning and improving your own trading skills by understanding the strategies behind those alerts. So, those are some of the things I think you guys should cut off from your trading. Like I said earlier, when things don't work, instead of overcomplicating and adding more elements, start by taking things away. Look at what's not working, even in your personal life. I do the same thing in my personal life. When things get too chaotic, I go back to the basics. I think, okay, let me see what I'm doing that I shouldn't be. Once I start removing those things one by one, my life drastically improves. The same applies to trading. When I hit a trading slump, I take a step back and think, what do I need to stop doing? I make a list, and every time I follow it, my trading improves. Just by taking stuff away, without adding anything new, it helps me so much. I hope you found value in this video. Thanks so much for watching, and I'll see you next time.